Hello everyone. In this video I'm going to talk about a more revised version of my trading style, and I want to share a lot of new things that I've learned as well as some old things for people that don't fully understand what's going on with these. So what I'm doing here is looking for divergences with the TDIX money flow. That's these waves. I'm not really looking at the ones on the RSI or fast MA is what it is. It's the money flow divergences that I'm focused on in this. So most of you may know what divergences are, and here's a little cheat sheet. You can pause it, screenshot it, or go find a cheat sheet online. And I'll just go ahead and assume you now understand all of this. And what you have here is price coming down, money coming up, and you have your trend line. So the breakout didn't really occur. However, you could have taken a trade on this right around this time, and it still would have been a good trade because this is the 4-hour time frame. And if you look at it on the 5-minute, it'll be a bigger move. Let's say if you just measure it here to the trend line, you start like about a 15% move, depending on if you got in on this wick or not, maybe 16. So you could have had a couple percent per hour probably, and that would have been pretty good, pretty easy. And it hadn't even broke out yet. That was just a move up to the trend line. But if you really want to do it right, you want to wait for a breakout of the trend line, but you want to find your divergence on the higher time frame and then go down to a lower time frame for your entry. And you're not always going to have the big move until the trend line and the 200 SMA is broken. That's typically when the price really moves. Say like on this previous situation with Mudang, you had your downtrend, you break out, and then it had a nice move up, but then as soon as it broke the 200 in this case, it had a big move again. And see how it wicked? That's why you want to take profit. There's probably a trend X level here or some Fibonacci level here, almost certainly, but I'm not like going to focus on that right now. So you have this trend line and you want to wait for your breakout. That's a good way to get a trigger. And another way to know when to take the trade is which down here is like, say, go down to the 5-minute and get on to where your price is getting closer and closer to the trend line until it looks like it's breaking out. And on the 4-hour, this would have been a wick, and it would have just looked like a wick, but on the 5-minute, it looked like a breakout. And what you have here is that price didn't come back down as far from the trend line, but then you had another bullish divergence right here. As you can see, the money or price coming down while the money went up. And so you also had some double bullish shark fins. They probably would have been under your indicator X, under this one. That would have been a good move, but it was having trouble playing out right away because of all the pressure. The 200 makes resistance, and people don't like to go long under it. Most people. So you would also had key levels. Say like your trend X will show that. And if you just turn on your trend X, you'll see this is a weekly trend X. And what do you know? Right around here where this bullish divergence was, price was tapping, what is this, support 1 or previous day or previous week low or something like that. So basically, you know, these trend X lines are key levels. And when you see that happen, like you would know, okay, you got your bullish divergence right at a key level, close to a trend line. You could have taken the trade, like say right around here somewhere. And like even here, even the money flow was coming up sharply right here. while the price was staying pretty much the same or going slightly lower, you knew it was probably about to play out, and you could have taken the trade with low risk, and in this case you could have held it. That wasn't a super profitable trade. It moved slow. It wasn't very volatile, but you did have the trend line to overcome, and there was probably the 200 as well, which was causing some resistance here. And higher time frames would show there's probably a moving average here too that caused a rejection. Anyway, so that's pretty much how you do it, how you find these trades. But what I would recommend is that you use things like indicator X, and take, even though you've got a divergence, make sure you're entering. If you're going bullish, try to enter on a bullish shark fin, at a trend X level or some other key level. And it's just going to help you tremendously to just avoid being in the red so much on your trades. And just kind of use the divergences more as confluence. I often trade off of them, but I'm starting to see, they're more of a type of confluence. They're very strong confluence, but you can mess yourself up trading on these alone if there's no key level, because they won't always play out immediately. This trend X is kind of slowing my computer down a little bit. See, like you had this divergence here, but it didn't really play out for quite a while. Any of these all through here, like if you had been like, oh, I think it's going to break out, and you entered here, and no, it just went down. It kept building pressure. But I will tell you that the longer the money flow stays on one side on a high time frame, the bigger the move is going to be once it starts playing out. You did have another thing here I wanted to say, because there was a hidden bullish divergence after. So this was a very, very safe entry right here. So after you had the breakout, and then you got some sort of retest of this level, there's probably a level here. Once again, I check trend X. No. Well, that was probably the 50% line, which is often a level in itself. Yeah, 50% right there. So what you also have here after the breakout is a hidden bullish divergence where the price was still going up and the money flow came down. And so basically people were trying to get in and the price was running away from them. But you did have this, and you had a nice wick right here, couple wicks showing as the money flow was coming up again. And at the same time there was the hidden bullish divergence, you also had a regular bullish divergence here. If you see it, I don't know if you see it, but it's there. So basically the price was still coming down again, and then money flow was coming up right around that time it wicked. And if you would have entered there, price did not come back down to that. So you had a very good entry. So that's basically the most basic part of it. But you have different types of divergences. You have different scenarios, different types of key levels. The dynamics of moving averages, especially the 200 SMA, which is a moving dynamic support and resistance line to help you. So I would always recommend having that, ready to turn on. Like, whenever I try to go far back with my slow internet, it tends to kind of lag a little bit. See, like in this was a previous breakout. This was like, if I'll zoom out on the 4 hour after I'm done looking at this and show you, this is an example of another hidden bullish divergence, very slight there from the price going up while the oscillator was way lower. And that was super shark fin, super oversold. But look at that move, So when you see the money flow doing these things, you know, and check your indicator X. Oh, that's not a very good. Why is it not loading? That is so bizarre. Anyway, there would be an indicator X value line right here. So let's just draw it if I can. I think my internet's like lagging out all of a sudden. So there'd be an indicator X line there. And you would have been under that line, and you'd have been looking for a long at one of these shark fins, or, you know, you got your divergence here to kind of give you more confluence, more confirmation. So back to the 4 hour, what I was showing you right there was the other scenario on Mudang over here. And the point was to show you that oftentimes after a regular bull div, you then have a hidden bull div, and then you have a massive move. So like if you would have got in on that, which you could have, you know, with the extra confluence of seeing the money flow divergence, look at that, 80% in one day. That's excellent. And price didn't go back down. If you would have got in, you could have held that sucker. So this is why you shouldn't just turn off your money flow. You should kind of be aware of it at the very least. So that was like the bullish scenario. Here's a bearish scenario. And I'll try to be quick, but on this one, it's not as obvious. This is a new token, and you can tell by how the 200 is barely starting to paint on the screen. But when I look at the 1 hour, it reveals what happened here. You can see that much of the money flow. And you had your money flow coming down. Money flow was going out. And then you had your price going up. And on this 1 hour, wouldn't you know, even when it had a pump right here, it wicked on it. But the money flow was in the green for a long time. So when it finally went to the red, well, that was a way too late. You would never want to enter here. But when it finally broke this trend line, and you look at the, let's say the 12-minute lower time frames, and you see a trend line with multiple times prices touch that trend line, well, eventually on the lower time frame, you're like, okay, well, there's the trend line, here's the break. On the 4 hour, this vertical line was where that fast MA crossed the money flow line. So right around the same time of the trend line break, you had the 4 hour crossing into bearish sentiment. So that would have been a killer short. So that was an excellent short trade if you would have taken it. And you could have seen it early and been prepared by looking at the money flow. So it's at the 1 hour again. Yeah, see how that red vertical line is right. Well, actually, that was a little late. I think that was on the 30 then. Anyway, I thought I had it. No, somewhere else. Anyway, maybe it was the 2 or something. I don't know. Anyway, that line is in the wrong spot. It should have been over 1. It's locked. But anyway, that's your bearish scenario. So I'll look at some other ones here. This one here, I thought Mix was dying. I thought Mix was done. And, you know, this happened days ago. As everyone knows, this thing just went ballistic and exploded. And I looked at this, and I was like, seeing this before, and at the same time I'm like thinking of this one token I remember called Grass. It had these bullish divergences that printed, and it never took off. The token was dead. The tokenomics were crap. But here on Mix, there was a bullish money flow divergence right before that explosion, and I'd actually seen it, but I didn't consider it because of this wick. And I had my line like this, and I was like, oh, that's not a divergence, because it wasn't. But then I looked, and I'm like, well, right above the money flow, this is the low that I wanted to put. I should have put on it. So basically, yeah, the money flow was higher, and I missed that. That would have been life changing if I would have gone in that with 10x and $100. I would have made like 15,000. That's the math. Maybe like 20,000 at this point because mix keeps running. I mean, look at this thing is going straight up. Is that crazy or what? Anyway, there was a bullish money flow divergence there. And boy, it hit it with the wick and everything. There was probably a trend X level there. I wouldn't doubt it. I don't have my settings right. Yeah, there's one here. Well, that was the, just kind of go like this and like this. Yeah, there was a trend X level there. So mix wick down and tap that trend X line perfectly with the bullish divergence, and then it was off to literally the moon city or whatever. But when I seen this sideways chop here, I'm like, I'm not touching mix. And I was like, I don't trust it. So I was, when I seen this, I think I looked at it and I was like, maybe, maybe not. I even posted about mix and said, I think it's like dead or something. Because like when you see this, I won't touch coins that when it starts looking like this. But now I know they might move anyway. But when you look here too, right after that beautiful wick tap that trend X line with another bullish divergence on the 10-minute, you had, you know, your late entries, easy to take. Like here was one, like one of the perfect entries at a money flow divergence. A hidden bullish money flow divergence was right here. Right. I mean, imagine you would have used 20x leverage on that thing and went long. Yeah. Anyway, let's move on to the next one and look at bio as some shorts. So bio, it was an interesting one. I think Seth even mentioned about it with SMCX and he was going to short it. Maybe he did. I don't know. But bio had a killer run too, and then it had a bearish money flow divergence, and then it had this trend line here that it broke. I probably won't go back to that. It would be, I'd have to go way back on the lower time frame, but I'll look at a more recent one just to show you the elusive hidden bearish divergence, because these are harder to find. They exist and they tend to be good trades, but they're harder to see. You have to scan some humps of the money flow to see these. And so in this case, you had your downtrend, but then like you had a lower high on your money flow and then a higher high. And then so, but you had a lower high on your price. So this is a hidden bearish divergence. And not only that, you had on the 3-minute, you had a little trend line and a break of it. You could have known to go short somewhere around here because of this divergence, as well as your super shark fin, which it might have came up at one more time, but then it had a dump. So that's an example of a hidden bearish divergence. If I ever say bullish instead of bearish or whatever, and I do it wrong, it's I say this so much, so it gets kind of confusing, and I don't always like proof check what I'm saying. Sometimes I might say bullish when I should have said bearish, but these are bearish divergences here. So there's so many to look at, really. I'm looking at something else on that one. Oh, saw me. I took this trade last night, and my stop loss got hit, and it was harsh. And I want to show you like what I learned. I learned a valuable lesson. This is on the 1 hour. So I looked at this, and I'm like, okay, wow, you got a 1 hour hidden bullish divergence. The money flow was like down here, right around here. And I had entered this trade. I went long. As you can see, it didn't work. It kind of did, but the thing was, and you can tell I have my 200 SMA turned on, but it doesn't appear because there's not enough data to print it unless I go to a lower time frame. say like the 10-minute, then my 200 appears. But on the 1 hour, which is the one where I seen the money flow divergence, usually you would see like a pump here, but see, they don't always play out immediately. And there was a trend line break, but it was on a lower time frame, and there was a key level. So this was an order block. You could see how the price went way up. This was a strong order block here. Normally you get a bounce at it, a pretty nice bounce, but in this case, the bounce was pretty lackluster. And I should have just taken my profit because I was in like 50% profit when I took this trade. But I wanted it to go up here. My target was set for this 4-hour value line that's up there. So anyway, there was the hidden bullish divergence. It actually would have even been here too. And then on the lower time frame, in the 5-minute, like there was a pretty solid bullish divergence right on the key level of the order block. And you know, you had your trend line, you had your breakout, and I entered the trade somewhere around here, and then I got up to here, and I'm like, yeah, this is great. You know, I was 50% in profit, and I thought maybe it was going to come back down to the 200 and bounce. But when I looked at the 10-minute, see how this 200 is a dynamic support and resistance. When you check different time frames, you start to see why price rejects at weird places. It's usually the 200 on some other time frame is what it is. And so on the 10-minute, price perfectly rejected the 200 SMA. And I might have noticed it, but I'm like, it'll get through. Like I was being hopeful, and I kind of bent my rules a little bit. And I suffered for it because my stop loss got hit. And I only used 5x leverage on it, but I entered somewhere around here. So when my stop loss was around here, it stung when it hit. You know, it was not fun. But if I would have made a pretty good amount of money if I would have just taken my profit right here, just in case. So if you ever enter on something like this, well, think about it. Basically, what you were doing, even though there was a higher time frame divergence, you were really getting your trade off of this lower time frame. And there was also bearish shark fin here where it hit the 200 on the 10-minute. And I should have known better to take my profit, because like you could trade every one of these moves. But when you're in one, I'm in a trade sometimes, I'm like, well, I want to make it a good trade, and I want to like show my P&L shot when I can make money all day long in small to medium amounts. But I kind of want to show something to kind of show, yeah, this is a good trading style, and it should be considered more than what it is, because it's very easy to see these early warning signs of trades coming up. But I don't know, I guess sometimes I get affected by that to where I kind of want to say, okay, I want to show a good like P&L, but the important thing is being profitable no matter how little the profit is. And in this case, I basically had got round tripped, and then my stop loss got hit. But part of the reason was because I was flying blind, and there wasn't enough data on the 1 hour to show me the 200. And I bet you that if it was on here, the 200 would probably be up here somewhere. And at that point, it'd probably be right around here. I don't know. I would say that price probably brought the 200 up to here or something like that. And basically, at this point, I should have known, wow, on the time frame that the 200 is missing, or the time frame that the hidden bullish divergence is, the price was way below the 200, which is actually bearish on that time frame. And the other issue is, for this divergence to invalidate, price would have to go all the way down to this line. So there was a lot of play in how far price could go down before it invalidates. Just because like it's unlikely to invalidate doesn't mean that it's not going to push down again. And when I took that trade, I even seen this 4-hour shark fin starting to form. But because I've seen so many of them form and just keep pushing up, I just kind of let it go. But I learned a lesson from that, and I think it'll be a really good lesson in the long run. Looks like ARC, which I don't really like this because it's not that volatile right now. It's got a bullish money flow divergence, and it appears to have had a breakout of some sort. Do you notice how I don't always draw my trend lines on the peak? And there's reasons for that. I won't get into all of it, but you only need the price to touch the same thing a few times. And oftentimes when you get the peak, it'll be kind of like an anomaly almost. But the regular price action will be kind of starting like after the peak in many cases, not always. But in this case, like I'm going to watch this one and see how this goes. Because it's starting to get above the 200, and it might actually do something on a lower time frame. So I think that's it. I went over most of the things. So you have your I looked at that one. You have your key levels. You've got your trend X. You've got you've got trend X. You've got previous day highs and lows. Weekly levels. Order blocks, supply demand zones, even higher time frame value lines are very good key levels. Like this is an indicator X value line. You will often have price react to those with a divergence. So yeah, it's something to consider. And so that, I think I've showed everything in this, the different types of divergences, including the hidden divergences, and how you can use trend lines to help you get a good entry. How you can, when you find the divergence on a higher time frame, you want to go down to the lower time frame. You really want to watch out for the 200 SMA, and you want to check different time frames. This is key. This is a really important part, because once you're in the trade, you want to be looking for a place to take profit, and that 200 is either going to be a good friend or your nemesis, because price will reject it just as it'll bounce from it in your direction. So you really want to watch the 200, your trend X levels, your primo zones. I didn't really talk about those in this one. I've talked about that a lot in other videos. It's basically another order block zone is what it is. You want to make sure there's enough data. This is really important to get your 200 painted. Also, if your invalidation line for, say, like a hidden bull div, in this case the 200 is starting to finally paint. You have so much room here for price to go down before it invalidates. I mean, this thing could come. This money flow could keep going low. It could stay low, or it could keep going like this. And price could keep going like, sometimes I click these and they don't, price could keep going like this before it goes up. So, there's a lot of risk involved with these newer tokens like SOMI or MIX or whatever, because you're not always going to have a lot of data, and PTB is kind of new. Now, of course, you can go to lower time frames to get some more data. When you go to lower time frames, you'll start seeing your indicators printing more, like the 200 and everything. That'll help you, but like I said, if the divergence is on a higher time frame, like in this case, you kind of want to heed to what that higher time frame is doing, because that's where it was valid. That's where it can invalidate, and it's very important. So yeah, understand how to do this, how it can be done, but think of it as confluence as well, and not necessarily. I wouldn't recommend using it as your trade entry alone, but um, continue to use things like if you use indicator X, because like I showed on here, like once you have a breakout, then you just go to your 5 minute and you start looking at your indicator X and your shark fins. And this is a really key thing. So once you really zoom in on here and you're just looking for like all these shark fins, like here under the value line, once you have all these entries, what you start to see is the wisdom, just the sheer wisdom of entering the trade according to the indicator X system. Because you take it, you enter here, it's a solid trade, it's going to probably go to the value line or the next liquidity line, which it did. You see that hit it all the way up here. If you entered here, it doesn't seem like much, 1.62%. Of course, it kept going, but you took that at 10x leverage, 20x, whatever, and then you waited and you got in again, and you're safe. You're much safer doing it that way. And in trading, that these markets are designed to extract money from you. So, yeah, you're going to miss moves. Like if you would have taken this shark fin right here, this one, if you would have taken that one and then held it, you could have held it for a while. You could have held this trade for a long time instead of just taking profit here or something at this liquidity line. But it's not always going to do that. And yeah, there will be signs like this price bouncing off of the value line. You'll see a lot of this right here. This happens a lot. But the point is, you've got one trade, two trades, like 3 trades, and it's safer. And that's how you do it. That's how you consistently make profit. You'll hear stories of people making crazy amounts of money, but those stories go a long way when you hear them because they're just such crazy stories. But the reality is a lot of traders are just going to lose money because they're chasing that home run, so to say. But if you hit these base hits, singles and doubles, like they say, you're going to keep making money consistently on your journey as a trader. A lot of people, we all want to make it big. We want to pay our bills. We want to help our loved ones. But, you've got to use wisdom. You've got to follow these rules that Seth made, like the indicator X system, the trend X system, the SMCX system. If you don't follow the rules, it's going to come back to bite you in the butt. So with that being said, these money flow divergence trading strategies are not like your end all be all go to, just because I do it that way and that's what I like to do. It's easy for me. It's like my main confluence. It's what I look for first. Just because I do it that way doesn't mean that you should. It doesn't mean that you're going to succeed at it. I guess sometimes stubborn, but I'm persistent, and that's why I've stuck with this and tried to develop this into a way to be traded, and to be consistently profitable with it and successful with it. So that's why I did it, because it's just my style. We all find our own style, and I encourage you to find your own style, find out what works for you, and keep using it and perfect it. And once you have something that works, make rules for it. And then once you have your rules, you follow the rules until it becomes so repetitive that it becomes mechanical and you have totally detached from all emotions from every trade. And so, yeah, I'm just talking now and there's nothing really to show you here on the screen, but that's the important thing, is to make your rules and follow them, and then trade so much to where you become mechanical with your trading. that you follow your rules and not your emotions, because your emotions are going to swing when your profits swing up. You know, you're going to feel emotion, but you want to detach from that emotion. And that's the goal. And just follow the rules, take your profit. What you get is what you get. And then when you look back on it and all your profits have compounded, that's when you're like, wow, this really works. And you've really become a profitable trader. So with that being said, enjoy these videos that I put here. It's just what I like to do. Also, don't underestimate low leverage. And yeah, enjoy trading. You can send me messages in the Discord or in the comments here.